Here's the deal. Out of state investing is definitely more challenging. There's definitely a lot more to think about. There's definitely a lot higher risk when you're going out of state. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer, and I want to talk to you about out-of-state investing versus in-state investing. So I hear this from a lot of people. You know what? It comes, I guess, mostly from people from like California, New York, New Jersey, Massachusetts, places that are expensive, really expensive to buy in. But I hear it even from people from Midwest or wherever. They just think, oh, my market got too expensive, whatever it might be, and I'm looking to invest out of state. I don't think my market's good. And although those are maybe true thoughts and maybe good, thing to be thinking about, is out of state investing the right move to make? And I think that's a good question to be asking yourself before you go and pull the trigger on out of state investing. Look, I've been investing since 2008. I have purchased and sold or purchased and flipped a lot of houses. I have purchased and kept a lot of properties. And I've done everything from, single family home rentals to, fix and flips, duplexes, quads, all the way up to 10 unit, 20 unit, 200 unit plus buildings. Also done assisted living. I've done retail, done industrial. I've owned a ski resort, owned land, all kinds of stuff. So, and not saying this just to talk about me, but what I have a decent amount of experience, and I've been investing since 2008. So, not a crazy amount of time, but a decent amount of time. I've also invested in state and out of state. I've invested in Minnesota, which is in state for me, locally in the Twin Cities. I've also invested out state, meaning not in the Twin Cities, in some rural areas and some different cities. I've invested in Wisconsin, the state next door. I've invested in Ohio, Kentucky, Tennessee, South Carolina. Trying to think if I'm missing any states. Here's the deal. Out of state investing is definitely more challenging. There's definitely a lot more to think about. There's definitely a lot higher risk when you're going out of state. When you're in state, it's easier to control things. It's also easier to jump over to the property real quick to manage something that needs to be taken care of, right? It's also easier just to meet with contractors, meet with property management companies, meet with anybody that you need to meet with in order to keep your property running smoothly. It's also easier just to find properties, quite frankly, because it's easier to build relationships. It's easier to go look at those properties to make sure you're buying the right property. You got to kiss 100 frogs to find the prince when you're buying properties. And so you're going to be looking at a lot of properties. When you're out of state, it's a lot more challenging to be looking at a lot of properties. It just is. It takes a while to really, really get good at the market and understand what's good, what's bad, what's in between, what your true criteria is, and to be able to see those properties, especially if you're buying single families and duplexes. So let's just stay on the small property side, the single family up to about a 10 unit building, okay, or a small, commercial building. If we are in a smaller building set and we're trying to invest out of state, it's really challenging because look, I mean, I owned duplexes and I owned small multifamily in Wisconsin and in Ohio. Okay. So the duplexes were in Wisconsin. And I think I had, what did I have? Four or five duplexes. I also flipped two houses there. And so It was a 5 hour drive to where I was investing. I was investing in the Milwaukee area. A lot of good things were happening in Milwaukee. I really liked the market. I was like, the Twin Cities is just getting overheated, which in hindsight it wasn't, but I thought it was. And so I'm going to buy these properties in Milwaukee. I'm going to kind of rinse and repeat essentially everything I did in the Twin Cities. And I felt like Milwaukee was about 2 or 3 years behind Minneapolis. And again, in hindsight, it really wasn't. Um, there was some good deals, and I did okay in that market. But the challenge was I couldn't fly there because it was too expensive. So I had to drive or take the bus. And I took the bus a lot of times, 5 hour trip. What a pain in the butt. That 5 hour trip ended up being like 7 hours with the bus, taking going there and back, sleeping on the bus. And even that, it was expensive because sometimes I would have to stay overnight. And that's even more expensive. I'd have to rent a car. That's even more expensive. And so it wasn't worth it. And then when I drove, it was still expensive because I had to again stay in a hotel. I had to pay for my gas and spent a lot of time just staring at the road. Right. So I looked at that and went, wow, man, I'm just not making all that much money on these properties. And it's costing me a lot of time, a lot of hassle. I'm spending time away from my family. It's just really not worth the hassle for me. I was making a couple bucks, but at the same time, like a duplex, single family home, quad, like I don't think you can truly make enough money to make the out of state, in my opinion, the out of state worth it. I have a hard time justifying that. Can you build some equity? Can you create some cash flow? Sure. If it's the only way you can figure out how to get in the corridor, is it a bad thing? I mean, maybe not. It allows you to get in the corridor, but you know, is it really worth it? Probably. So look, what else can you do? You can certainly go that route and be investing out of state because it doesn't work in your own backyard. But I would say, like, first of all, just really think hard about that. There's just the numbers work way better in your own backyard, especially when you're buying small properties. Look, I just got off the phone with a prospective investor. Same type of deal. Buying small apartment buildings, and I did the same. And look, even when it's in your own backyard, you're just not making that much money on these small apartments. On paper, it looks like you're going to do well. Like, man, I'm gonna crush it. I have all these units. You start adding them up. You're like, man, everything's going to make me, $500 a month times, I got 10 of these, 20 of these, 30 of these, and you go, man, I'm going to really make some really good money doing this. And all of a sudden, it just seems like I don't even know what happens. Like, it just seems like the money just erodes. It disappears. Uh, you know, a roof or a tenant moves out, and you got to do a full turn over on this place. And so instead of making $500 a month on that house, you end up, or duplex or whatever, you end up making zero or maybe negative. And that happens to five different houses and five different duplexes, whatever it is. And all of a sudden at the end of the year, instead of making the $200,000 you thought you were going to make, you end up making $20,000. It seems to happen a lot. So when you're out of state, it's going to happen even more. It's going to be more pronounced, just typically is. So really, really focus on your own backyard. Really, really focus on your own backyard. If you, especially if you're committed to buying your own properties. What's the other alternative? Well, don't if you're in a market that it doesn't make a lot of sense to buy in your own state, California, New York, New Jersey, you name it, even a lot of the Western markets just doesn't make sense. And quite frankly, just a lot of markets today don't make a lot of sense. And so what else can you do? Um, certainly you can fumble along and do that. Or you can look at different alternatives. What else can you do in real estate, right? There's a lot of different things you can do. So at Endurus, we offer syndications. And so, a lot of people choose to sell their properties and invest with us passively, or they don't have properties and they go, man, I could buy a duplex or I could invest with Endurus Capital. And so they do that. And so then they get a piece of the pie on call it a 120 unit building. Right now we're buying a 113 unit building in Louisville, Kentucky. It's 2024 build. It's townhouses. It's a gorgeous piece of real estate. And it's going to provide, at least projections show it's going to provide excellent cash flow. And we believe we'll be able to perform on that. And great returns, right? So you got to look at that and go, okay, well, what kind of returns am I getting versus if I do it on my own? Well, what kind of returns can I get? And again, it's what you show on paper on the duplex. Just I'm here to tell you, it's just 9 times out of 10, it's not coming true. Like what you think is going to happen on paper. Look, take it from my experience. Like I've owned a lot of properties, and I've talked to a lot of people that own a lot of properties, and everybody says the same thing. Like on paper, it looks like you're going to make $500 a month, but in reality, yeah, certainly you do that a couple of years here and there, but in reality, you make $100 a month. And so think about that. Think about, okay, if I invest in a syndication with Endurus, so like what can I make? Or, that doesn't have to be a route you go. Certainly it's an option. But you could also look at, I mean, if you want control, look at what investing and buying like a triple net lease type thing, like a Walgreens, a Dollar General. There's a little higher risk stuff that's still fairly low risk triple net lease, commercial space. Look at that. Like, what does that do? Like, pretty hands off, but can provide you pretty good returns, right? Triple net meaning they're going to take care of all the expenses. So when that roof does need to get replaced, that's not your responsibility. You got to make sure it gets done, but it's not your responsibility. There's passive lending, right? You can lend, of course, if you're investing with Endurus, you're an equity owner, so you're getting equity, but you could also be a lender and led for, let's call it flips, or to other people in this business. You're lending, and you're the bank now, and so that's another way. Now that's not real estate, it's lending. So it's different. You're not going to get the tax benefits. Certainly there's no depreciation. There's none of that. And you got to be careful because there are laws around it and rules. And of course, in everything, there's laws and rules, but so you got to be careful, make sure you're doing it right. But you can lend on real estate. Now, again, it's not real estate. It's lending, but the product is still real estate. So it could still be lucrative and profitable, although a little bit higher risk. And you got to know what you're doing. People out there are note buyers. Like there's that too. Again, different deal. You're not really owning the real estate. You're unless you actually take it back, but typically you're just owning the note. So you're a lender. But there's a lot of other options, a lot of ways to go about it, things to think about. But I think buying in your own backyard is 9 times out of 10 the best way to go. It's just my experience. And looking at the cash flow in state versus out of state, I think 9 times out of 10 it's just the way to go, is buy in state versus out of state if you needed control. I also think if you're going to go out of state, that the vast majority of the time, for the vast majority of people, you would have better returns and better luck if you invest in a syndication, if you invest in a triple net lease, if you go a different route, right? If you do a JV partnership with a group of people that are going to buy a larger building and operate it properly, right? You got to make sure the proper operations is the right thing. But those are, in my opinion, the better way to go than buying that duplex. Because like I said, man, just talk about a pain, right? Flying out there or driving out there, staying in the hotel, all that kind of stuff. In reality, you think you're making $500 a month, but you're really making 150. And then all of a sudden you got a trip that's going to cost you $1,000. And well, holy crap, that's my cash flow for the entire year or close to it. And so you go out there once a year and you're making nothing. You go out there twice a year and you're losing money. That just doesn't make sense. So, yeah, anyways, I think it through. It's tempting. It's very lucrative, and very I wouldn't say lucrative, I guess, but very tempting And I hear it all the time, and I get that question all the time. And people talk to me about all the time, like, what do you look for in a market? I can tell you all the things you look for in a market, but the same goes for your own market. And by the way, like every market has sub markets, and so before you write off your market, like look at the sub markets within and decide if it's truly not available. Now, again, I get it. Like you're never buying in most of California unless it's just as equal to out of state, like 3 4 hours 5 hours 6 hours away. Like you can't get there easily, and you're gonna have an overnight. Well, that's basically out of state. um but yeah, I get it. Like you can't buy in California, you can't buy in San Francisco, you can't buy in LA. You're not going to cash flow. You're just not. And so you're going, well, what do I do? Like, there's alternatives that you have to look at. That's going to make you, in my opinion, a lot more money. It's going to keep you way more sane. And it's just going to be better overall for you. So invest in state, invest in what you know. You're going to have a lot more success. You're going to be able to talk to the brokers. You're going to be able to just, in my opinion, have way more success doing it. Out of state has taught me a lot. And now that I'm investing out of state, they're big properties. So that's a big difference than a duplex or a triplex or something like that. But now that I'm investing in state, we have the team. So it takes a lot though to build those teams. And even today, as I look, like our out of state properties, it takes us a lot more to hire and fire, a lot more effort to hire and fire. And when we find a contractor that it starts working for us and it doesn't work out, it's a lot more effort to get them, replaced with a new contractor. You got to fly down there, especially if you're firing kind of some of your A players, right? Or who you thought were A players. Now you got to fly down there. You got to meet people. Yeah, you still got to tour the property. Still got to be on site. So, it's still a lot of work, and that it takes time and effort and energy, and it also takes money too. So, all right, that's all I got for today. You have a fantastic rest of the day. Make every day a Saturday. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.